It's Brian Preston, the Money Guy.
Now, this next question is from Drew. Drew said, hey, I made enough off my house to be completely debt-free. Should my wife and I pay off loans and debt or roll it into the next house in this crazy market? We are easily covering the monthly payments. I think a lot of people are finding themselves in this situation, Brian. And interest rates are changing a little bit, right? So it wasn't too long ago. Interest rates are in the high twos, low threes. Now interest rates are in the fives. If someone's selling a home and they have a lot of equity in it, right? And they receive that, how should they approach the decision of how much equity to put into the next house? Or do I use that for other things? Like, what are some things that someone could think through?
I wish it was just an easy answer and that's why when we did the financial order of operations, moneyguy.com/resources, this is like a 9-step choose your own adventure, and it will help you get to the right answer on all the things, but it's not such an easy black or white or binary 0 or 1 type answer. And let me explain a little bit is that because we have so many trolls who are like, you guys are talking about don't prepay your mortgage until you're 45. So that means why wouldn't everybody just go out there and refinance their house so they can go invest in the stock market? And I was like, well, that's always a problem because refinancing your house is expensive.
It's costly. Yeah.
And then you don't want to go through that expensive transaction. And then there's also, I never know what you have going on personally. But I mean, we had 2 phone calls yesterday with clients, Bo. And it made me cringe because everybody knows I am over 45. I'm on this journey to pay off my house by the time I'm 50. And so I had 2 clients yesterday. They're in great financial situations, way ahead of the curve, incredible resources behind them with their net worth. By all means, they reach that criteria of being over 45 and they can pay off the mortgage all day long. But there starts to be this nagging where if you have a 2.5% mortgage rate, and with 6 interest rate increases, you're probably going to be making over 2% on your cash in the coming few months, it starts feeling really weird to pay off that 2.5% mortgage while new mortgages are coming out at 5%.
Yep.
So these are all the distractions that go on with somebody. And then you can imagine Drew and his family, they sell their house, they have this huge pot of equity, and they're trying to figure out, what do I do with this check? What do I do with this cash? And I'm going to tell you, this is why you do need to go take part in the 9-step choose your own adventure of the financial order of operations, is because it's going to let you quickly go figure out, are there debts that you should pay off? Are you ahead or behind where you should be financially? Because if you're behind, you might need that big check you got from that house. After you put down the 20% on the next house, you might need that excess to either pay off the debt or catch you back up to where you should be financially. But hopefully it's good news. You'll find out you're way ahead of the curve. Now you have choices and you can figure out, is this a maximization decision or is this a minimizing the risk type decision? You will be in the driver's seat to know what's the right purpose and answer on that. And that's why I know you guys watching this, you're like, they always seem to come back to the financial order of operations. Why do they keep saying moneyguy.com/resources and they talk about that 9-step? We really have tried to boil down everything and anything that you could face in your life into this. And that's why we don't push it enough. And it is a valuable resource. If you go to learn.moneyguy.com, we actually have an accelerated course that lets you get into the minutia of what to do with those 9 steps. But that's what I would encourage Drew to kind of think about doing with this big decision.
The only thing I'm going to throw on the end of this is when you do think about, Brian said I just want to put 2 guardrails in place. When it comes to your second home, right? When you're upgrading, changing homes, fill in the blank.
Not second to live in, but it's just not your first house.
The first house you're buying, 20% is a must. We give first-time home buyers a little bit of flexibility. They can put down less than 20% if they need to in order to get in that first house. On your second home, it needs to be 20%. Well, if, Drew, you're making this decision around, okay, do I put more money in the house or not? One of the guardrails you do have to have in place is your total housing service, your total housing debt cannot exceed 25% of your gross income. So if you're thinking, I'm going to put the minimum amount down and I'm going to keep all this equity on the sidelines or do something else with it, but it causes your monthly debt service to be above 25% for housing, you're in no-go land. So you need to make sure you keep those guardrails in place so you don't get yourself out over your skis. Great question. If you'd like a Tumblr, you can write, not Rebecca, you can write Katie, Katie, at moneyguy.com.